Hi there, welcome to Kneppy Invest and welcome to another answer and reply video. It is Saturday, the 12th of July, 2025. Time is currently 10:46 a.m. I did go for a long run this morning. In fact, I sort of changed up my long run route in Harrington and I went via this fire trail through the Crowdy Head National Park. And at one point, it felt like I was the only person in the world. It was quite desolate in there, fairly flat, and it was about almost 9 kilometers long. Anyway, so a nice run this morning, about 23, 24 kilometers long. And I just had a shower and I put a load of washing in, and that should be finished within 50 minutes. So I will take a break about the 50-minute mark. You won't notice a break, but during that small break, I would have put a load out onto the line and put another load in. Anyway, okay, and don't forget, there will be no ASX Daily Rundown video on Monday, the 14th of July. So don't wait up for that one because it ain't coming. Okay, on to, well, the last question last week was from JustJimCramer. John's Lyng group is up trending nicely. Too late to jump in. I can't remember what I said, but you've probably done fairly well if you did jump in because there was a takeover bid for John's Lyng group, share price up 22%. So hopefully I didn't say, no, don't jump in. But yeah, John's Lyng group up 22%, was it? 23% maybe. 22%, 23%, 22.64%. Finished at 390. Funny enough, I did sell it at 390. Share price did not move much all day. And that is what happens when there is a takeover bid. And if there's no further news within regards to this takeover bid, no competing offer, no reason why this takeover bid will fall through, what you see is the share price will just gradually go up. So that's one of the reasons why some people might buy into this, because share price will increase. They might argue a bit of arbitrage, but there is a bit of risk attached to that. Okay, on to the first real question. No repeats. Nice says, can you please review Cochlear? Chart starting to look interesting. So this chart actually did pop up recently for me. And they released a negative trading update. But alongside the negative trading update, they also released a new, some new technology or something. I forget exactly what it was. New technology, new equipment, new hearing aid or something like that. Not hearing aid, but you know what they do. And that really negated the negative trading update, which is why we saw a wild spring in the share price. So Cochlear provides update to financial year 25 earnings. So negative, that was on the 12th of June. And also Cochlear launches new cochlear implant system. And that's why we saw the share price started significantly down and then just rallied all through the day and went back up to where it started. And since then, we have seen share price rally. So the chart does look good. Probably my main concern about Cochlear, just valuation. That's probably my only thing about Cochlear is valuation. And really the I wouldn't say lack of growth with Cochlear, but the growth in Cochlear doesn't really justify that valuation. So the company really has to get a move on with growth to really justify the current valuation. And what I mean by that, revenue growth, about 10% per year, which is okay. Earnings per share growth, about 10% per year. But PE ratio currently 53.7. So you want some better growth than that to justify PE ratio 53.7. But this company does generally trade on a fairly high PE. And I don't think there's going to be that much disruption in space. So I would say this is a high quality company, but just valuation. And in fact, I was hoping share price would drop a fair bit to buy a high quality company at better prices. So, but the chart looks good. I don't mind the chart. It's just the reason I'm talking about valuation is when you see this sort of breakout, how much more can the share price rally if it's already maybe overvalued? Now, you could say, oh, CBA, look at CBA, that just keeps on going up. But eventually the tide will turn. Eventually the tide has to turn for CBA. The better thing about Cochlear, at least it's growing. And even if it's overvalued, eventually the financials will catch up. So over the long run, I don't think you're going to see the share price go lower too much from here, not significantly lower, but it could. That's the thing, it could. But if you're in it for the long term, maybe 10 years or so, I do think the share price will be higher than it is now. So that's the attractive thing about high quality companies. There's a good chance the share price will be significantly higher in 10 years' time. And that's why valuation doesn't matter as much, but I still like these sort of charts for companies that are pretty good value. But the chart does look good. Interesting. Actually, it does look interesting. Yeah. Ahmed says, you still holding Telix? Yes. Telix is a long-term hold for me. I have mentioned this a few times in the past few weeks. It's a long-term hold for me, but if I was trading it, I'd be maybe, I wouldn't say nervous, but I'd be probably getting out. Maybe already up by now. And funny enough, I always do this every single time. So the chart has turned negative, slightly negative. They did release something good the other day, and as soon as that happened, share price started to sink again because there's a little bit of pressure on the share price. And the reason there's been a little bit of pressure is because the share price has been high levels over the past, well, since the start of this year. And that means there's a few shareholders underwater. They think this company's a dog stock. So why do they think this company's a dog stock? Because the share price fell after they bought. And that is the mentality of a lot of investors. And if you don't believe me, I do have two separate examples of people I work with. And I can tell you this much, there's not a lot of people I work with which I would consider investors or anything like that. So it was just really interesting that two separate people I work with said very similar things. I bought into a company, share price fell. So when the share price gets back up to where I bought, I'm just going to sell. And this is from two different people. And I didn't say anything. You do what you want to do. But I was thinking at that point in time, if the share price rallies, the share price could be in an uptrend. And the other thing I would say is, why did you buy into it first place? If you're just going to sell because the share price fell after you bought, what is your reasoning for buying and reasoning for selling? And that is the sort of investor that I wouldn't say up against, but that is a sort of investor out there. A lot of those sort of investors are out there. And that is why I believe if you put some effort into investing, you can significantly beat the market because that is the market. Anyway, so if I was trading this, I probably would be out. And because there is, even if the company releases something slightly positive, you have seen a little bit of pressure on the share price, but who knows where the share price is going to go from here. So I'm in this for the long term, and I haven't even had a thought about selling out just yet. Because if I just sell out because the share price is showing its slight sell signals, the share price could rally and then I'm out. I could sell half. I suppose I could do that, which I have actually done for other companies, but for some reason, I just don't want to sell Telix. The growth has been just fantastic, and there's no reason the growth can't continue. Okay, thank you for that. Ahmed. Oh, Sensei mentions that in Money Magazine, issue 290, page 82. In fact, this is not a magazine I read all that often. Predicting that Pro Medicus will be $1,000 a share in not too distant future. Current price is about 300 or just above 300. So can the share price triple in the not too distant future? Well, what is the definition of not too distant future? We're talking about 1 year, 2 years, 5 years, 10 years, 100 years. I mean, if you're talking about the age of the universe, the not too distant future could be 1,000,000 years from now. So what's the definition of not too distant future? This is another case where the company looks really overvalued, but they keep proving themselves. Put it that way, they keep proving themselves. And this is a case where I think a lot of people have been caught out. I think the company is significantly overvalued. And I do actually know some investors, even some famous investors, who have completely set out of Pro Medicus because I thought it was too expensive and the share price just kept on going up. And that is why technical analysis can be very useful, because I don't think if they employed any sort of technical analysis into their systems, they would have sold out. There was no reason to sell out of Pro Medicus at all. Now, I have taken profits, and the main reason was because Pro Medicus was a very big portion of my portfolio, and I just decided to take a little bit off the table, not a lot, just a little bit, and based off the chart, I should have done that, but that's okay. I'm happy with that decision. Anyway, but just look at this chart. Maybe they would have become nervous when the share price fell during the tariff debacle. Funny enough, we're into the second phase of the tariff debacle, and the market doesn't care right now, does it? But this is the chart of a wonderful company. This is a chart of a company that's just hitting out of the ballpark. Yeah, and if you have a look at the weekly chart, it's just wow. But then the valuation. So there's always, by the way, the share price did pop up twice now of the 200-week moving average. Look at that in the COVID-19. And then also June 2020. I just bought after that little dip. And right now the share price is well above the 200-week moving average. So the way you could look at this, by the way, share price got sort of close in April, $160, and the 200-week moving average was about 120. So it got close. But if you did see the share price fall towards this 200-week moving average, that's sort of the floor right now, and I would be buying more. But that's a fairly big fall if it drops from here. But again, contract wins. Could it get to 1,000? This is the difference between like CBA and Pro Medicus. Pro Medicus is growing at a significant rate. And even if it does look expensive, I'd say it's probably cheaper than CBA because at least Pro Medicus has growth and it could grow into that. It can grow into its valuation right now. I don't think CBA can do that. In fact, if CBA went sideways from here, it might need 15, 20 years to grow into its valuation. Maybe not that long, maybe 10, 15 years. But that's one of the attractive things about companies that are growing really quickly. They can actually grow into that valuation. So thank you for that. And maybe I should read Money Magazine more often. Haven't even thought about it. Okay, Trader Hooper mentions, so I was thinking of including some more indices into my technical update, and Trader Hooper has some examples here. He checked out market index to see what choice we had. There've been some pretty amazing one-year performances, including the obvious gold up 54.95. I'm not sure if I would put gold. It's too what's the opposite of broad? Whatever it is, the opposite of broad. But also comms services, XTG. The other thing I might do is have a look at the companies within these indices, just to make sure they're not. Again, I can't think of words. They're not the opposite of diversified. Anyway, energy X. It's funny, I can think of the opposites, but not the actual words. Concentrated, that's the word I was looking for, just to make sure these indices aren't concentrated. Like comm services, maybe there's one company, like 50, it takes up 50% of the indice. I don't know. Energy, XEJ is up. For the week, winners were XMJ Materials, XMM, which is the one I was looking at, and XJR ASX 200 Resources. So I wonder which one is the best. And then, of course, just in case anyone doesn't know, we can click on the index name to see the constituents. Yes, thank you. Nice functionality, which I've never checked out before. Might be worth checking in on this list on occasion. Maybe quarterly or half-yearly, just a thought. So I do this quite often when I do the ASX Daily Rundown. I do actually open up the indice or the sector and have a look at the constituents because it is interesting. Thank you for that, Trader Hooper. And maybe have a look at comm services and see which mining indice is the best. Okay, here's JustJimCramer for the video bank. Please share your thoughts on momentum trading and ETF MTUM. I have put those two into my banked question spreadsheet. So these are two questions I might answer, and I'll answer those particular questions sometime in the next 6 weeks, to be released more than likely in October. I've almost finished September, by the way. I made a purchase. Jonathan Katos, major purchase of POD. Piece of dung. Oh, that's terrible. I was just thinking of POS, piece of, the last word there. But POD is a piece of Podium Minerals. Sorry, Podium Minerals. Okay, I didn't know that. Made a purchase of Podium Minerals, tally on the back of a very nice recent chart and significantly oversubscribed. A couple raise. Platinum macros look good. Also, keen for any of your thoughts. So I don't know anything about Podium Minerals. So I suppose this is platinum. They did a couple raising presentation, fully underwritten 2.6 million entitlement offer. I don't know, unless I could delve really deeply into Podium Metals, but that will take me probably not 5 minutes, probably take me 10 minutes, and I don't want to do that right now. Always the first thing I always look at when I first look at a company like this is, are they in production? More than likely, no. How long have they got to get in production? Don't know. They're still going through the not exploring phase, but they're still doing drills, that sort of thing. Then I have a look at the quality activities highlight section. So Podium becomes the first Australian PGM developer. Platinum. Successfully completed the EVM nickel transaction and acquired all of EV Nickel's assets and secured lending. Commenced phase 2 of the flotation test work program using diamond core from the recent. So I have no idea where they are. So this is more of a case, how much do you know the company? What about management? Do you believe the management? What's your risk profile? For me, this is more of a story stock. So I'm trying to steer away from the majority of story stocks. And one of the reasons behind that is you'll see that there's going to be a lot of volatility in the share price of story stocks because it's going to be really hard to gain a valuation or a true valuation of a company at any stage when it is a story stock. How do you value it? It's almost impossible. So sentiment is a main driving force for these companies. So in my opinion, trading these companies is the way to go. So let's just have a look at Podium Minerals. So as I said, trading, I'll be more interested in trading these. So we'll go back to this. And you can sort of see the volatility just in this company over the last, well, since 2025. Share price has been as low as 2 cents. Now it's at 5.5 cents. And even going back further, share price was in a long-term downtrend, looks like. Yep, share price was as high as 44 cents back in 2022, a long-term downtrend. And at least the share price is going sideways. So that's one thing going for it. I think downtrend has definitely come to an end. And at least the share price has got back up to those highs. So it's at a very important level, the previous highs that was reached. So I wouldn't be surprised to see a little bit of selling, but we've probably seen that little bit of selling coming in the last week. And the last thing is the volume. Look at the volume. So we did see a big spike in volume just during the last rise, and that volume died away fairly quickly. So the interest in this company was very fleeting. And it looks like maybe the interest in this company is more than fleeting this time because the volume has maintained. The volume has remained higher for a little bit longer. So that could be a good sign moving forward for Podium Minerals. So I don't mind the chart, but other than that, I don't know a lot about the company. And, yeah, that's probably all I'm going to say. Thank you for that, Jonathan Katos. Okay, some few replies to this one. Oh, I've already answered this. Hi, Kneppy. I answered this answer this. This is one question where I just answered it directly. Hi, Kneppy. How do we access the community where we can post comment questions to go in your question and answer videos? And I said post your question, comment in the comment section of any video like you did with this question. And did Sky High Vids ask a question? Let's have a look. I haven't had a look at this. Oh, right, thanks. I was hoping you'd mind taking a look at Argenica Therapeutics, please. It's an Aussie biotech that we are waiting for phase 2 results in the next month or two. I've been following for 2 years and finally took a position at the start of the year. Thanks for all you do for us. You're welcome. Okay, and then he just repeated the question. Okay, Argenica Therapeutics. Okay, so I have heard this company, of course, AGN, I'm assuming. I can't remember exactly what the company does, so I'm assuming this is more of a story stock again. And let's have a look at their most recent Appendix 4C. So this, if you didn't listen to my previous commentary on Podium Minerals, will repeat a little bit here. So this is a story stock, no receipts. So it's all about the story and how they're moving. Another thing I'll mention is you did say phase 2. Now, I typically don't get excited about phase 2 trials. That's just me. Now, the whole reason behind that is I discovered this company called Neuren Pharmaceuticals in 2012, 2013. I really liked what the company was doing. I thought, this company has potential. And I didn't take a position in the company. I just started following him. And then my interest in the company just faded away over time because nothing much happened. They were in like phase 1 or phase 2. Nothing much happened. And then all of a sudden, they released successful phase 3 trials. And that's when I became interested. And that was really the turning point for the company. That's where the share price absolutely took off. So it's successful phase 3 trials. I've seen plenty of times companies have good phase 2 trials and phase 3 trials were a disaster. And then the share price of the company just collapses. So I think it all comes back to your risk profile. How much risk are you willing to take? Because we just don't know if Argenica Therapeutics is going to make it. We just don't know. No one knows. Not even the management of the company knows. We just don't know because there's been plenty of companies who have been unsuccessful when the management thought they were going to be successful. So that's what I would say. So it looks like they're doing a traumatic brain injury. So we really hope this company is successful. And I'll say that with most biopharmaceutical companies where they're good. Developing novel therapeutics to reduce brain tissue death after stroke and other types of brain injury and neurodegenerative diseases to improve patient outcomes. So we do hope this company is successful, but just because, hope is not a successful investing strategy. or yeah, hope it could be an investing strategy, but it's not going to be what's the word? Good investing strategy, a successful investing strategy. So for me, Argenica is too much of a story stock. I need to see some proof. But you and me are completely different. I would say your risk profile is a little bit different than mine. So you're willing to take that risk. I would also say make sure you keep following the company, understand the management, that sort of thing. And yeah, so I would say good luck. And you could say, well, luck is for those who are unprepared, and you're prepared. And that could be the best thing. If you're prepared, if you know why you're bought into Argenica Therapeutics, that is the best thing. If you can tell me, if we had a conversation and you told me why I have invested in this company, that is the best thing you can do. Just don't say, well, because I like what they do. That's just not good enough. So anyway, so that's for me. The chart, AGN. I have a feeling this chart had been popping up at what? Yeah, it definitely was popping up. Oh, I can just see, yeah, 2024 was a great year for Argenica. Share price now going sideways. So this is more of a trading stock for me, particularly if I see some successful phase 3 stuff. That is when I would get really excited about Argenica. And the thing with that is if they do get successful phase 3 trial results, the share price more than likely will be significantly higher than it is now. But it's just me de-risking. Because if they don't have successful phase 3, the share price will be significantly lower. So it's all about de-risking. That's why I do it that way. But everyone's different. And just understand why you're doing it. Thank you for that, Sky High Vids. Hopefully you're not high on something. Hopefully you're high on life. Maharajan Good. Hi, Kneppy. I like your process of daily rundown videos for ASX. Can you do a video about how would you do daily rundown in Nasdaq, please? I won't do a video on how I could do that. I did have a think about this, and I just don't think it would work at this point in time. I just don't think it would work because unless I find a few platforms where I can have all the news flow in the United States of all the companies in the one place, that's how I would do it. The other thing is I'd have to do it in the morning, and I'm not sure if I could do it in the morning. I'd probably have more of an audience, maybe, potentially more of an audience. Could I do a daily rundown for Nasdaq and New York Stock Exchange? So I won't do a sound video on this, but I am thinking about it. But I just don't know the logistics behind it, how I would do it. I'd probably need some more sort of information, more platforms, better platforms out there. But I am on the lookout for that, by the way. I am on the lookout. But it is a possibility. I'll say a slight possibility at this stage. Jake Barry says, hi, Kneppy, bit of an interesting week with uranium, particularly Boss Energy, dropping a fair chunk. I noticed that last night. So I'm going through all the charts, all my watch lists, and I noticed Boss Energy has fallen like a rock, dropping a fair chunk in the last 2 combined weeks. Are you still bullish on the sector, thinking just a sideways float for the time being? And what are your thoughts now on Boss Energy compared to, say, Paladin? There was also another question about uranium somewhere up here. See if I can find it. Of course, I won't be able to find it because I do know it's here. And have I gone past it? There's a chance I've already gone past it. Or maybe it's not here. Maybe I forgot to like it. Anyway, there was a question about uranium somewhere else. And maybe what I need to do is just do this. Why? Yeah, there it is. There it is. Why is uranium down, NEPs? Okay, so that's the other question. I did like it here. I did part it. So the reason I heart your questions is because when I filter, I can go responded, and all the ones I hearted, all the ones I wanted, all the questions and comments I want to talk about in this particular video are there for me to do. And for some reason, that particular question is not here. So that's interesting. That means in the past, I might have missed some of those questions, but there you go. Okay, so let's go back to this particular, if I can find it now. There it is. Yeah, so uranium. Let's have a look at uranium chart. So it has dropped, but where is it? It's up now, but this is, if you have a look at the daily chart, it's very important. So it broke out of the downtrend mid-June, went on a nice rally. It's pulled back, and the most important thing is that it didn't fall below this downtrend line. And a lot of times when you do see this sort of breakout of a downtrend, sometimes you will see the price or whatever you're looking at, it will test the downtrend and then take off again. So hopefully this is a start of the price of uranium going back up. But again, it's a commodity, and commodities can be quite fickle, very, very fickle at times. And I do have less confidence in commodity charts than I do in, say, stock prices or stock charts. So it does look okay. I don't mind the little pullback. So a lot of times you will see pullbacks, and this could be a healthy pullback. It's just sort of like getting rid of those who are more nervous about uranium. So all the nervous Nellies have sold out, and now the holders of uranium are stronger. That's the theory behind it. And now it's very good that it's sort of starting to turn around. But we have seen a little bit of selling the last day or so. The reason I say that, you can see the share price or the price of uranium did go higher, and then it's fallen back. So we have seen a little bit of selling coming in. So I'm okay with this chart at this point in time. And if you have a look at the Boss Energy, in fact, we'll have a look at Boss and Paladin. I am trading Paladin, and I haven't sold out of that position just yet. And Boss Energy, there was just a little bit too much froth, well, maybe not froth, but a little bit too much excitement in Boss Energy, I thought, compared to other uranium companies. So Boss Energy actually wasn't on my radar when it came to which uranium company to buy. You could have bought uranium ETF, whatever that is. I'm pretty sure there is a uranium ETF. Uranium ETF. What's that in? I'm pretty sure there is a uranium ETF, but I don't have no idea what it's called. That's Boss Energy. But if you have a look at Paladin, it also has pulled back, but not quite as much. And I don't mind this chart. And I think this one could rally from here. And there's a few others I didn't mind either. So uranium, I do have a uranium watch list. I think it was DPLO, hasn't dropped as much at all. Yeah, it hasn't dropped hardly at all, DPLO. So I think those who went on a big run like Boss Energy have pulled back a fair bit. Although you could say DPLO went on a pretty good run. The other company I was looking at was Lotus, because this one was looking interesting as well. And it has sort of it is looking interesting. Share price is going sideways. So this could be a nice little dip, buy the dip situation, with the view that the share price will go higher and really break out over the next month. But again, it's going to be dependent on the price of uranium. Still bullish on the sector? Well, yeah, I'm still. Well, I don't become bullish or bearish on a sector for the medium to long term. I just look at a chart. That's all I look at to be bullish or bearish on a commodity. Is I just look at the chart. For instance, silver. I'm bullish on silver right now just because. Well, have a look at silver. Have a look at this chart for silver. That's a beautiful chart. And yeah, so I should have been more bullish on silver a few days ago, because it's holding up, and then all of a sudden 2 days in a row, silver's just gone bananas, and up 4.42%. Gold is only up 0.94%. So silver's looking amazing right now. Okay, let's see what else we got here. Okay, MAP says bought Botanics on Friday following advice. So this is the day the share price went up 8%. People completely following the advice got stopped out at 22 cents. And then Ben Hutchison, what was the advice? Target 55 cents from someone. And Dev Shaw, I bought in July 2024 on some advice. Not sure if it was Next Investors or some other source. And yeah, this still intrigues me that people buy on advice or on broker recommendations. I have never done that before. I have never received a recommendation and bought on that. This is something I just don't understand. And I suppose Botanics is one good reason why I don't understand. I did buy some Botanics at 14.5 cents. And the share price is now 15.5 cents. So I'm still nervous about that trade, because I was hoping a better bounce, but it hasn't happened. So interesting that some of you do buy on this sort of thing, but I still don't understand why. So if you have done this in the past and you still do it, and you do it quite often, I'd like to understand why. Do you think because these people giving this advice, these recommendations, you think they are experts and you believe in them, their expertise, that sort of thing? I'd like to understand why. So I'd love to see you answer that question. Don't be deterred from me not understanding it. I'm trying to learn. Oh, Hustle Finance just said something really nice. And thanks for these daily rundowns, Kneppy. Super educational. You're welcome. So that's just an ego thing for me. Okay, with the Whitehaven coal, there is a gap fill. Do you expect it to fill in the short term? You just woke up like me. Okay. Whitehaven can. I'm not a biggest fill the gap person. I don't believe all gaps do fill. It does look like it has filled, sort of. Well, it depends on how you define fill the gap, because you'd say the share price would have to go all the way down to say 560 fills the gap, but the share price was at that level not that long ago. I've seen plenty of times when gaps aren't filled. Plenty of times when gaps aren't filled, and a lot of technical analysis people will say, "Wow, we can't buy in until the gap fills," and I'm like, "But gaps don't always fill." There's a thing called breakaway gaps. Breakaway gaps. This is a prime example. Breakaway gaps. And typically these, I believe, happen on positive news, which is something I look at. So breakaway gap, there it is. There's a breakaway gap. So share price gaps up on positive news. The share price just keeps on going up. So gaps don't always fill. I have been in arguments in the past about that. Gaps don't always fill. On occasion they do, but they don't always fill, because there are some experts out there who always say, or shouldn't say always, but they say gaps always fill. No, they don't. No, they don't. I do like this chart. This is one of my favorite charts right now, Whitehaven coal. I do like this chart. I should have bought. I was really going to buy some on Friday yesterday, and I maybe should have, but that's okay. That's okay. Anyway, Sensei says, thoughts on rent something, RNT, rent.com.au, I believe. Was in the news many years ago because what's his name bought some shares. What's his name? That's terrible. I forgot his name. Bevan Slattery bought some shares many years ago. And everyone just bought in because Bevan Slattery bought in. And that's something else I don't understand. Oh my God, Bevan Slattery bought some shares. I'm going to buy some shares. Well, share price took off. And I would say the share price is probably back down to where it was. Okay, rent.com.au. They help renters, I think. So this is another company where I just look at their Appendix 4C. Don't really care what they're doing. Just look at the Appendix 4C and how they're progressing. And it's a slow slog. I'll call it that. It's a slow slog for this company. That could still be good, but receipts, 897,000. Year to date, 6 months, 2.7 million. Not operating cash flow positive or free cash flow positive, so not there for me just yet. That is something important for me. I just want to see them get to that inflection point. Other than that, I don't know much about what they do, except they help renters find places. Let's see what they do. About rent.com to make renting rewarding. What does that mean? Made for renters. They are reimagining the renting experience to create Australia's most empowered rental community. Doesn't tell me much. So they have rent check. This is where that's more important. Easy way for renter to verify their ID. Rent bond, move now, pay later product. Rent Connect, a free connection service that makes moving hassle free and provides a renter with a 100 gift card. Okay, and Renter Resume. Renters can streamline their rental search. I'm just so happy I don't have to do this sort of thing. And Rent Pay. I'm just so happy I don't have to go through all this crap of renting. I'll never rent again. And let's have a look at the chart for rent. By the way, I haven't even told you what I thought about this company. Well, I've sort of, in a sort of indirect way, have. I don't think much about the company just yet. Chart looks interesting, but it's looked interesting in the past. You can see it went on a rally in 2024 early, and it's gone all the way back down. So whether this rally is well-founded or is a strong rally, probably is not. If we have a look at the weekly chart, you'll be able to see the share price just took off. Yeah. So this is when Bevan Slattery bought in. Back in February 2021, share price went all the way up to 38 cents, and it's gone all the way back down to where it started. Again, I just don't understand why people do that. My God, Bevan Slattery bought some shares. I should buy some shares as well. And if you bought at the open of that day, yeah, I can sort of see that. That could be like a bit of a trading strategy. You buy on open intending or thinking other people will buy because of that. And that probably would have been a very successful, really short-term strategy. But for me, no. Rent or RNT or rent.com, not for me just yet. Doesn't mean it can't be in the future, but not just yet. Vin Healy says, hi, Kneppy, I love cake. Who doesn't love cake? Well, I'll be honest with you. I like cake, but I don't go out of my way to eat cake. There you go. I love cake. That is cake on the Nasdaq. The Cheesecake Company sounds boring, but the chart has just broken through an all-time high and is trending up nicely. It looks like your kind of chart. The question is, would you wait for a pullback now, or will it keep trending up from here? It's on a PE of 20, but after investigating it further, seems to have huge growth ahead. First thing I'm going to do is just have a quick look at cake. I've never looked at this company before. I would be shocked if I would define this as high quality, but let's hope I'm going to be shocked. Okay, so cake, Cheesecake Factory, growth. So revenue growth, roughly, we'll say, we'll have a look at the last 10 years, 6%, isn't growing at a quick rate. Earnings per share over the last 3 and 5 years is really high. I'd want to know why. Share buybacks could be the reason why. But earnings per share over the last 5 years up 31.3% versus revenue 7.7%. So there's a bit of a disconnect there. It could be share buybacks. It could be margin improvement, which will be interesting. Gross margins 39.6, operating margins 5.7. It's probably not surprising. I wouldn't think this company would have high margins, operating margins anyway. Return on equity 23.7, return on invested capital 4.7. They must have a fair bit of debt. They do. So market cap is 3.2 billion, enterprise value 5.14 billion. So I do think you have to include the debt when you do a valuation of this company. So even though the P ratio might look fairly low at 20, they do have a lot of debt. So I would probably prefer to look at enterprise value over price. So price is also market cap, and enterprise value is the opposite. Not the opposite, but you know what I mean? So like price to earning, or P ratio, is just price divided by earnings, or earnings per share. But the other way to look at it is market cap divided by profit. So enterprise value divided by profit as well. So you could do that way. Enterprise value divided by profit, and I think you'd get a much higher number. Like EV to EBITDA is 16.7. Price to free cash flow 27.8. So just be aware of that sort of thing. This company does have a fair bit of debt. Debt to equity 6.2. That does seem high. One of the reasons why they might, another thing I'm going to go or mention here is, one of the reasons I might have a fair bit of debt is leases. And was there a change in reporting standards quite a few years ago when it comes to leases? And sometimes I wouldn't say ignore leases as a debt, because technically leases are a debt, but I will give a little bit more room to companies who have a lot of leases in the future, and maybe ignore that as being debt. Maybe that's the wrong way to look at it. But anyway, dividend yield 2.2%, payout ratio 32.9. Anyway, so first thing I probably want to look at is earnings per share. Why has that really increased over the last few years? A way to do that is have a look at shares on issue. Have they hasn't really decreased, but what about margins? Let's have a look at margins. So have a look at operating margins. In fact, operating margins, they've dropped. So revenue, slow increase, and then income. There could have been a one-off. Oh, that's the other thing I should mention. There might have been a one-off somewhere in there. Yeah, okay. So there was a one-off in 2020. And income was really low in 2023. So that's why 3 and 5 year earnings per share has been pretty stellar, because of these, more than likely, these one-offs in those years. So the income or the profit for this company can be quite lumpy. So keep that in mind as well. So I'd say I'm not sure if I would define this company as high quality. Anyway, so let's have a look at the chart for this one. Cake. Oh, it's at a really interesting level on the weekly chart. You put a line right there. It's gone. This is like a teacup. What's it called? The tea cup and handle, whatever you call it. Cup and handle. Yeah, cup and handle. Possible cup and handle. Not quite yet. So cup and handle. Possible cup and handle. Here it is. There. Look at this. So cup, and then we need the handle. So we haven't got quite the handle just yet. This does sort of look like that, doesn't it? Just look at that rounding. It's like a cup, but we just don't have the handle. So maybe the share price can go lower here and then break out above 65 in the handle part, because this is, the cup and handle tends to be a bullish signal. Anyway, so cup and handle, and this might be one of the first times I've ever looked at the chart and gone, oh, this is like a cup and handle. Cup and handle. Interesting. That's what I'm going to say about Cheesecake Factory. Yeah, just keep it, yeah, that P ratio, they do have a fair bit of debt. Brick Thailand says, thoughts on Trump's threat of 200% tariffs on pharmaceuticals from Australia in the future? What companies it would currently affect unless they produce in America to avoid tariffs? I've heard it might affect CSL, but it seems like no one cares. No one's it's really weird. No one is taking Trump's tariffs seriously right now. And this is going to affect the American people if it goes through, because they'll be paying significantly higher for their drugs. That's it. They'll be paying significantly higher for the drugs. It might negatively affect some Australian companies, but it's going to significantly affect American companies, American people. So I have no. And is the taco trade there too? Is Trump going to? Trump always chickening out? Is that going to happen this time around? And if it doesn't, is the markets sort of ignoring what's happening now when it comes to tariffs? Is that foolish? Is that foolish? That's something I've been thinking about. Is what's happening now with the markets foolish? Because last time this happened, the market dropped a fair bit. Anyway, so what companies it would currently affect? Let's ChatGPT this. I did hear chatter about CSL, but I haven't really thought about it just yet. So let's ChatGPT this. New chat. Pharmaceuticals. What us Aussie? What Aussie pharmaceutical companies it would currently affect unless they produce, and talking about 200% tariffs. Let's see if it can answer that, if it can understand. Okay, several major Australian biopharma firms will be hit hard by 200% US tariffs. There you go. CSL, there you go, CSL. Now, this does come from news sites. So news.com, exposure, global biotech giant exports plasma-derived therapies processed in Australia. There you go, valued over $2 billion. If unable to ship processing in the US within the grace period, tariffs will drastically raise costs for Americans. Main Pharma, haven't even think about that. I'm pretty sure they're being bought out or something. Mesoblast and similar biotech firms. But they're hardly in production right now. Why these companies are vulnerable: high US export reliance, grace period design, PBS conflicts. I don't like how pharma lobbyists are targeting Australia's PBS. I think they should piss off. We should run our own country. They run their country. So I think they should. I won't say the word I want to say because it's a swear word, but I don't like that. And I'm pretty sure our politicians will stand firm when it comes to PBS. They can do whatever they want with our country, but stay away from us. How can companies avoid the 20% tariff? Ship production to US? Not as easy as that. Not as easy as that. It will take a long time, by the way. Seek tariff exemptions, which I heard CSL is trying to do. There you go. CSL is already pursuing this route. Diversify export markets, hedge on margin. Anyway, I think this is, I just think this is, it's just, tariffs are not good. Tariffs are not good. And it's mainly not good for the people in that country. So Trump is not doing anything good for the people of the United States. And unfortunately, a lot of his followers don't know because they're ignorant. They have very low education. And there's a reason why Trump said, I like the uneducated, because they tend to vote for him because they're uneducated. And tariffs is a great example of this. Everyone knows who's done any work with tariffs that tariffs are not good. They're not good. They don't do anything. Maybe a slight thing, but they're more negative than positive. Anyway, so that's what I'm going to say about that. Is Frontier Digital Ventures breaking out on the chart yesterday? Well, this is another one that popped up. I don't think I'm there yet with Frontier Digital Ventures, but it did pop up the other day on my watch list, or my scanners, I suppose you could say. Not the weekly chart, daily chart. It did pop up, but I'm just not there yet because it's in a bit of a resistance zone. What I mean by a resistance zone, let's put a rectangle here, just in there. So in that sort of zone, a lot of people did buy back between late March and early June. So when they see the share price rally back up to where they bought, there will be a little bit of selling pressure on the price. I'm not sure why the share price has rallied. It could be just noise. We haven't seen a lot of volume coming in either. I'd like to see volume. And I do prefer, in this sort of situation, a breakout occurring on positive news, sort of like Change Financial. So this is my favorite type of breakout, when the share price pops up on good financial news, on good volume, good financial news. And I haven't bought into Change Financial just yet, but possible trade for me. So Frontier General Ventures, it needs a little bit more evidence for me to say it's breaking out just now. Kapow says, does the Koonenberry chart look uninteresting to you? Let's have a look. What's an uninteresting chart? I'll show you what's an uninteresting chart for me. I've got to think now. I've got to think. TLC, the Lorry Corporation. This is an interesting chart. I hope this is an interesting. This to me. Well, actually, it's not as uninteresting. There is a bit of a short-term uptrend happening. What could be an uninteresting chart? I don't know. There's many out there, but let's have a look at Koonenberry. Is this uninteresting? Oh, okay, massive rally in the share price from January all the way through to May. Share price went up from 1.5 to 9.5. Share price pulled back significantly. Now, the volume has remained fairly high. And we have seen the share price go from 3 cents to 5.1 cents. Again, this is more of a story stock, and how powerful this rally is remains to be seen. The volume was okay in a few days, but yeah, this is sort of, I'd probably prefer to be in here. The main reason I prefer to be in here is because there's less resistance. Here, at these prices, there's going to be more resistance because all these shareholders have bought at higher levels not that long ago. So a lot of these are probably still in. Now this is a dog stock. They just have to get out. So that does lead to a little bit more resistance. And you can see the high volume. So there probably would be a fair few shareholders underwater. The best way to get rid of that resistance would be to release a really positive, powerful announcement. That would be the best way. But I don't it's gone down a little bit too much, and the rally we've seen hasn't been all that strong. As strong as what you would like. Fishbowl, time to get into lithium stocks, in my opinion. Which two stocks are on your list, mate? I am trading one lithium company, Core Lithium. Main reason behind that is because the Core Lithium chart. They released something, I forget what exact, but it was a really positive announcement on the 14th of May. I thought it was good. And I was thinking, share price was going to struggle to get above 10 cents. Share price pulled all the way back down to 7.5 cents. I wasn't even looking at that point. Share price then rallied on the 27th of June, and then I bought 2 days later at 9.9 cents. And the main reason is I thought, I think the share price will break above 10 cents. It has. But the one thing I don't want to see is the share price go below 10 cents. So currently at 10.5 cents. If we have a look, 10 cents is a very powerful level. It's in my opinion, it's the most powerful level for a company. And one of the reasons behind that is the share price, it moves in different pips. So it goes up and down in 0.1 cents, below 10 cents, but then 0.5 cents above. And you can just see people loading their shares to buy or sell at 10 cents and just below or just above. You can just see how many buys there are at 10 cents and 10.5. Anyway, so it would need a lot of selling for it to get below 10 cents, but it could happen. All it needs is one big shareholder just to sell. So I do like this chart, and I do like the whole reason share price has broken out is on a positive announcement. But I do have a lithium watch list. I went through it yesterday. Or did I? I can't remember. I think I did. So Pilbara's on my radar. Not quite there. Liontown is looking really good. It's at a very important level, the previous high. So Liontown looks pretty good. Don't know anything about Sayona. No. Vulcan did a couple raising. No. Novonix. No. And the rest are fairly small. So the main ones for me right now, Core Lithium looks probably the best. Liontown is right behind it. Pilbara would be the one I'd like to buy eventually because that I think is probably the best. And something was bought out. Something recently was bought out, but I forget. Anyway, so those are some of the lithium companies I'm paying attention to, and I've taken a position in core. And I do think eventually lithium will take off again, but I'm not sure when that's going to be. Okay, well, Saf says when a company submits a takeover bid and the shares of the target, oh, you know what? I'm supposed to take a break right now. So I'm going to hand out or take out my laundry because we're at the 50-minute mark. So take a break because I'm going to take a break. And back with Saf's question. Okay, I am back. And Saf99681 asks, when a company submits a takeover bid and the shares of the target, John's Lyng Group example, continue to trade at a discount to the takeover price, is the acquirer allowed to buy shares on market at the lower price? I had no idea on the answer. So all I did was actually Google this. And AI Overview says yes, in most jurisdictions, the acquiring company is generally allowed to buy shares of the company, target company, on the open market at a lower price during a takeover bid, even if the market price is below the bid price. However, there are often rules in place to prevent the acquirer from using this to manipulate the market or unfairly disadvantage target shareholders who have already accepted the bid. I was looking for any sort of Australian examples here. Here's one from Allen's, I don't know, website. Is this a lawyer or something? Anyway, so I don't know the absolute answer. Takeover bids are subject to the following key rules. All offers must be the same. The bid price cannot be lower than the price which a bidder paid for a target security within the previous 4 months. So I'm just trying to see if there's any sort of examples here. Anyway, so I suppose the answer to this is I don't know, but AI Overview says yes. Maybe I can do this in JustGPT since I've already done it. Let's have a look. Or you already used JustGPT in this particular video. So let's do it. No, I've got to actually copy the question at first. Copy. Paste. Let's see what JustGPT says. Okay, there are strict rules under, this is actually really good. Strict laws under Australian Takeover Law, Corporations Act 2001 that must be followed. Here's a breakdown relevant to your example. There you go. During a takeover offer period, the acquirer may buy shares on market, but these purchases must be at or above the offer price. There you go. If it's a formal takeover bid under Chapter 6 of the Corporations Act, this is to ensure fair treatment for shareholders. The market purchases must also not be misleading or deceptive in effect. If the takeover is an off-market offer, any on-market acquisition must be disclosed, etc., etc. So based off this, they can't. They can. What it says, it's really good. It says the acquirer can buy shares of the target company on market at the lower price, but then it says the purchases must be at or above the offer price. So I'm going to say that's the right answer. I suppose we could look at Chapter 6 of the Corporations Act, but I don't really want to bore you, and I don't want to bore myself. So what we'll do is say, no, they can't. So I don't know. Don't know the absolute answer to that, but I'll go, probably they can't. Rick Van says, Ferraro to buy Kellogg's, Fruit Loops. I actually did see this. I did see they were buying Kellogg's, and I was like, really? That's my first thought was, really? Ferraro? Is Ferraro that big? And let's do this. I'm gonna actually do a new chat. How big is Ferraro? It's probably much bigger than I would think it is, based off this. Okay, for 3.1 billion, just seems like Kellogg. Seems cheaper than I thought it would have been. So Ferraro is a privately held Italian group. Okay. So we don't know exactly how they will be valued, but they had revenue of 18.4 billion in 2023-24. Okay, so we don't know exactly how big they are. Second largest chocolate and confectionery company. Nutella, Kinder, Ferrero Rocher, Tic Tac, Kinder Surprise. Oh, Nestle would be the biggest one, would it? Uh, who's the biggest? Although even PepsiCo has a lot of confectionery. So Ferraro is huge, a global powerhouse in confectionery with nearly 20 billion in sales. Okay. Anyway, so irrelevant for me because we can't buy Ferraro. Anyway, Bitcoin, the whole reason actually part of this is because Bitcoin reached a new record high and Aussie dollar to US dollar, or Aussie to US dollar high since November. And then I had a look at Bitcoin and I went, oh, hello, Bitcoin. Hello, Bitcoin. This could be, yeah. So Bitcoin chart was looking really boring. Now, boring is a relative thing. Going sideways, we'll say. And unfortunately, for some people, when they see something going sideways, they just sell out because they become bored. And then what happens is the share price breaks out like Bitcoin has here. This is a breakout from this little short consolidation period. And Bitcoin has got to a new all-time high. And Ethereum must be breaking out as well. Let's have a look. Oh, yes, possible breakout for Ethereum as well. So crypto doing really well right now. And Aussie dollar, let's just have a quick look. Oh, it's approaching 66 cents. I like this. I like this chart. Needs to go higher quicker, though. All right, Trader Hooper says, I thought LIS Energy announcement was interesting, but I don't know how close that makes them to production or if this is very early stage. So I'd say this company is. I didn't read this announcement. So this must be pretty much a story stock. Share price up 15%. So I did miss this one. Let's have a look. LIS produces Australia's first lithium metal foils. What time was this released? Okay, completely missed this one. Yeah, even though I did miss it, it's not the sort of announcement that would get me all that interested because it's maybe the first step in one of many for the company moving forward. And even if they did have this successful manufacturing step, it doesn't mean it's going to be successful in the long run. So there's a lot of hoops the company will have to jump through for this to be overly positive for the company in the long term. So at least it's a positive step. I'm just going to have a quick look at the chart. I've seen many occasions when you think, oh, this is great for the company, and then, yeah, nothing comes of it. Chart actually does look good. But again, look at this. There was a lot of excitement in this company in October. That excitement died away really quickly. And that is a problem with storage stocks. How long will the excitement last? I actually do prefer this. This is a little bit more positive. There was a nice little volume spike on the 25th of June, and the share price had been going up since then. So I actually do prefer this little rally compared to the one back in October. This could be more long lasting, or put it that way. It could be, but maybe it won't be, but it could be. Better probability. Okay, so Trader Hooper is doing more research on LIS Energy, and leave your research in the comment section of this video, please, if you want. If you don't want, that's okay as well. Also liked First Wave, FCT, a company I've been following for quite a while. I'm still following it. I'm just waiting for First Wave to show me signs. I suppose. Expanded contract renewal with Microsoft. Overall, a pretty quiet day for announcements. That's the truth. So still following First Wave from about 4 or 5 years ago. Secures Microsoft. Yeah, I did see this one. I'm not surprised the share price has rallied. So let's just have a look at the chart for First Wave. Now, I'm pretty sure I started following this when they listed, if I remember correctly, maybe late 2020. Oh no, well before that. Maybe that's when I first started following them, late 2020. But you can just look at this chart. It's an ugly chart. Now, maybe looks like they listed in 2016. It's an ugly chart. So again, this is a case where I'm just waiting for something more from the company. The company has had a few good appendix 4Cs in the past, but typically it's a one-off good appendix 4C. So again, I just want to see something from the company. So let's have a look at the most recent appendix 4C. Oh, I should have a look at LIS as well. First Wave, yeah, fair bit of receipts, but still not operating cash flow positive. So still a little bit away from that. But I think on occasion they do have a good quarter where they are operating cash flow and free cash flow positive. And LIS, does this company have any sort of revenue or receipts? I am assuming no. I'm assuming no, but I could be wrong. I just don't remember this company popping up. And oh, they did have $1,000 of receipts for the year to date. So $1,000. There you go. They did sell something, maybe one thing. Maybe they found some bundled up copper and they just sold it. Receipts. That's receipts. Anyway, so still a story stuff for me. JustJimCramer says, latest thought on HMC and Reece. Charts or company itself? So I do own HMC. Oh, are you talking about Honda Motor Company or I thought it was HMC Capital. HMC, where's HMC Capital? There's HMC Capital. And I don't see any I have a HMC Capital, looks like some options. I have Honda Motor. Maybe if I go all. There you go. It's popped up in all, not in stocks. That's weird. So I did buy some HMC Capital. The chart looks horrendous, but I do think possibly, I think the market has overreacted to the downside of this one. So this is an infrastructure company. They have renewables, data centers, I think real estate as well, if I remember correctly. And I do think the share price has collapsed from 12.50 to 3.75. On the upside, when the share price was going up, I think the market was overreacting at that point, and now it's overreacted on the downside. And I do think there is some value at this level. There's a nice little support level, the lows we saw in 2023. So yeah, that's the main reason I bought some shares in HMC Capital. Not a trade. This is more of a longer term, just because I think there's some value with that company. Fund manager, maybe. Asset manager. We'll call it asset manager. I'm going to see what TradingView calls them. I'm going to say asset manager. Yeah, I think they are asset manager, but there you go. Fund manager, asset manager. And what's the other one? Reece. They had a negative trading update not that long ago. Share price dipped down a fair bit on a Friday, the 27th of June. It's not that long ago. Down 19% on the day, and the share price just keeps on falling. There is a support level at $13, so it's just above that level. It looks like it did bounce off that level on Friday. Share price got down to $13.09. So maybe the share price might bounce a little bit from here, but the chart looks pretty bad. You could say maybe there's some value in this area because it is at support level. The lows the company saw back in June 2022. So maybe, yeah. So both companies are at a long-term support level. So that's probably the only positive things I can think about the charts for both companies. And finally, Simon PT 2000 says, Kneppy, do you think the tariff war will trigger a second wave of inflation in the US? I was going to say, yeah, I think maybe it will, but I wasn't confident. And do you know what you can do? You can actually go into, now I'm not sure if I'll do it in this particular video. Where is it? Run deep research and go relationship. I should have done this before. Relationship between tariff and inflation. So I'm looking at peer-reviewed articles. Now this usually takes a while. Oh, got to. No, okay. Okay. What should I answer here? Studies. I'm looking for studies. Just looking for studies. So I want peer-reviewed articles. Now, this usually takes a while. So it's going through all academic papers, studies, looking for the relationship between tariffs and inflation. I would say more than likely you're going to see a short-term bump in inflation because type prices go up. But I think maybe in the medium term, because economies will be negatively affected, you might see inflation falling a fair bit because people can't buy anything or they have trouble buying as much stuff. This takes a long, long time. So starting research, I've done this a few times in the past, and I just went away and did something for a while and then came back and There you go. It's finished. And so I should have done this. I should have been planning this. There you go. So studies on the relationship between tariffs and inflation. What I'm going to do, I'm going to end this video right now, then do a standalone video on this particular question, and then release that question or that standalone video on Monday, the 14th of July. There you go. Okay, so look out for that video. And I'll actually also release another video on the 14th of July. That video will be on 10 stocks on the ASX whose charts are looking really interesting to me. Anyway, so that's another video I will do. Anyway, so that's it for this video. Have a good day. And don't forget, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.